Hey everyone, this is Andrew Jordan from NodeWise. Welcome back. Today we're kicking off this series with a topic that's both really important and often misunderstood: retirement strategies for MSP owners. So if you run a managed service provider, retirement planning can be a huge lever because the right plan can lower taxes and create structure as your team and cash flow grow. Let's start with my usual disclaimer. This video is for educational purposes only. It's not tax or legal advice. Every situation is different. You always want to consult your own professional before making any decisions. All right, let's talk retirement. Most people know the basics like IRAs, but for business owners, especially those with employees or higher income, there are some lesser known options that can be much more powerful. Let's start with the simplest option: traditional and Roth IRAs. For 2026, the contribution limit is $7,500 if you're under 50 or $8,000 if you're 50 and older. These are super simple to set up and very low cost. But here's something a lot of people miss. Your ability to actually deduct your IRA contributions depends on a number of factors. It's not automatic. You don't want to make an IRA contribution assuming it's deductible and then it turns out it's not. So definitely check on that. Now let's move into SEP IRAs, that's SEP IRAs. These are fairly straightforward and allow you to contribute more than a traditional IRA in most cases. The key difference is the SEP IRA contributions are made by the employer, not by the employee. That means a uniform percentage has to be contributed for all eligible employees. With SEP, the kind of entity you are makes a huge difference. For 2026, the SEP IRA contribution limit is the lesser of $72,000 or 25% of eligible compensation. Here's how that plays out. If you're a sole proprietorship, that 25% limit effectively just works out to 20% of your net self-employment income. That's after subtracting half of the self-employment tax and the SEP contribution itself. So 20% of your profit if you're a sole proprietorship. S corporations, the 25% limit applies to the W-2 wages paid to the owner, not total business profits. So SEP IRAs are a good fit if you're a solo entrepreneur or maybe have just a spouse on payroll. But it's a lot less ideal if you've got a larger team because, again, you have to make the same contributions to every employee. Next, 401ks. A lot of business owners don't realize how much flexibility these plans can actually offer. With a solo 401k, you can contribute both as the employee and as the employer, meaning you can potentially put away much more than you can with a SEP, again, depending on your exact numbers. If you've got a team, you can set up a traditional 401k with features like profit sharing. It's a little more work administratively, but the flexibility and the higher limits often make it worth it compared to a traditional, say, IRA. You can also use a 401k to contribute to Roth accounts. And here's something important. If your income is too high to contribute to a Roth IRA, which has limits, you can still contribute to a Roth 401k because there's no income limit for Roth 401k contributions like there are for regular Roth IRAs. For 2026, here are the 401k numbers. Employee deferral, up to $24,500. Combined employer plus employee limit, $72,000. It's slightly higher if you're over 50. Also know that there's a tax credit if you set up a 401k plan where you can actually get tax credit that helps defray some of the costs of setting up the plan and even a little bit of the cost of the matches. So make sure you check into that. Let your CPA know if you're setting one up for the first time. Now let's talk about one of my favorite under the radar strategies: defined benefit plans, sometimes called pension style plans. These are more complex and require an ongoing commitment, but they can allow you to contribute far more than a 401k or a SEP even, sometimes hundreds of thousands of dollars per year, depending on your situation. For high-income business owners who want to accelerate retirement savings and reduce taxable income, this can be a really powerful tool. The key with defined benefit plans is that you need to commit for the long term and work with a professional who really understands how to design and maintain the plan. They are not for everyone, but in the right situation, they can be a game changer. So let's do a quick recap. You can think of retirement plans for business owners as a kind of progression from simple to more advanced. IRAs, most basic option, low cost, easy to set up, generally best for sole proprietorships or very small setups without employees, generally not ideal for S corporations. SEP IRAs, simple and good for certain small businesses. Contributions are employer only, and the same percentage must be contributed for all eligible employees. It's 20% of net profit for sole props or 25% of W-2 wages for S corps up to $72,000. 401ks, flexible, scalable, and offer higher contribution limits. They include both pre-tax and Roth options with no income limits on those Roth 401k contributions. And the contribution limits are not based on company profit or W-2, and the limits are similar to SEP when you count in the employer match. Then there's the most complex but potentially most valuable, the defined benefit plans. If you're really high income and want to maximize your retirement savings, they're worth looking into. That's it for today's video. Next up in the series, we'll be diving into depreciation and specifically how to use it strategically under the new One Big Beautiful Bill tax rules that passed in 2025. So stay tuned for that one. And remember, if you're a client and you want to explore these strategies in more detail, let's make some time to talk. If you're not a client, but you're running a successful business and want to see how my team can help, feel free to reach out. Thanks for watching, and I'll see you in the next video.